Hey guys, what's up? It's Ace coming to you on February 28th, 2019. Today was a crazy day in the market. It was real choppy today. I actually caught a really amazing Netflix scalp to the downside, made about 30%. It was the only trade I took. I think I was in the trade for like 9 minutes or 10 minutes, and that was it. That was it for the day. The rest of the day was super choppy, but it was good. That one trade is all I needed. Um, and now we're in aftermarket hours, and the whole Tesla thing just blew up. If you guys don't know what I'm talking about, I guess they came out with a lower priced Model 3 and they had to halt Tesla trading. And then when Tesla trading resumed, it was tanking. And of course, Elon Musk, comes out and says something wonderful, to the point of that they were not going to be profitable, or they didn't think they were going to be profitable in the next quarter. I believe it was the next quarter. I'm not looking at the articles right now in front of me, but of course, that drove a lot of the aftermarket downside move in Tesla. So, if you're watching this video today on the 28th, you may want to keep Tesla on your short list for tomorrow because there may be some more downside in that name. However, though, I wanted to make a video about something that I think is really, really important. I think it's something that every trader needs to have an understanding of. I'm a technical trader. I trade technicals. I'm not a fundamental trader at all. I just look at technicals, and that's where I make my trades from. I did that for 8 years. The last couple of years, I've really gotten into trying to follow the smart money and trying to follow the smart money through the options market by looking at their the options order flow, what they're buying into, maybe even what they're selling, as well as equity order flow, large equity blocks that are purchased by institutions and big money, smart money, as well as dark pool prints. And it's absolutely amazing how once you can understand how smart money works and where to look for their accumulation and distribution on a chart, and then you learn how to read order flow, it's amazing how you can ride their coattails and literally make profits right along with the big guys. Um, it's not something that's a perfect science. It's not like, oh, I see a fund buying 10 million shares and it's going to go up tomorrow. You still have to do a lot of your own due diligence. But once you understand a little bit about market phases, market cycles, then it makes following the smart money and knowing what they're doing, it helps to make it a little bit easier to understand and to apply to your trading. So with that being said, I'm going to go ahead and bring up my first graphic here. Who is the smart money? Um, these are the smart money guys, my friends. These are the guys who are moving the markets. Now, the smart money is numbers 1 through 5. 6, 7, 8, and 9, I'm going to talk about in a moment. I wanted to put them on this list. They're really not technically the smart money, but I'm going to explain why they're on there. The smart money is numbers 1, 2, 3, 4, and 5. Okay. And first and foremost, roughly 85% of the market is controlled by hedge funds, institutional banks, proprietary trading firms, billionaires, and high frequency trading slash algos. They control 85% of the stock market movement. 15% is controlled by 6 through 9. So 15% is controlled by investment groups, very small funds, small investors, some retail traders. 15%. That's all we do, guys. All of us together at our retail, we control 15% of the market. So let's talk about these players real quick, and let's see how we can benefit from what they do. First and foremost, let's talk about the hedge funds and the institutional banks and the proprietary trading firms. These guys, they accumulate and distribute large quantities of stock. They're the ones who determine the market sentiment. They buy at the lows and they sell at the highs. Heck, they create the highs and they create the lows, okay? These are the people who control 85% of the movement in the stock market, okay? Who else controls some of that movement? Let's not forget these guys, okay? Billionaires, big boys, Zuckerberg, Warren Buffett, Bill Gates, George Soros, Carl Icahn. These guys also accumulate and distribute large quantities of stock. I know, Carl Icahn, he likes to go in and buy up companies, and he's what they call an activist investor, and he puts billions of dollars out there, and he literally creates change in the company, and by doing that, he creates change in the stock price. So once again, these billionaires, they are just like the hedge funds and institutional banks. They can move markets all day long whenever they feel like it, okay? Um, Let's talk about this. What is this? These are the high frequency trading algorithms, HFT and algos. These algos are mostly computer based. They're not even, how should I say? It's not even human beings executing these orders. It's algorithms and computers. These computers are programmed to follow the smart money's large orders, okay? These computers, they buy or they sell aggressively depending on what the smart money does, depending on the hedge funds and the institutional banks, the billionaires. They create the initial move in the stock by accumulating or distributing tons of shares, and then the minute that move starts, the algos kick in and they follow the smart money's large orders. These algos, they buy or they sell aggressively depending on what the smart money is doing. They are the ones who cause the exponential volume increase and big directional price moves that you and I see in our stock charts, okay? So when we see those big volume bars print, we see those wide range bars print, we see that momentum just take off. That's all done. That's all HFT and algos. That's what we're seeing on our stock charts, okay? Their orders, like I said, they're automated. Their systems are capable of placing thousands of orders before you and I can place one single trade. And in a lot of times, they're in and out super quickly. They are like the ultimate in scalpers, okay? And they get in and out, in and out, in and out, in and out, and they're making bank. And they're also providing liquidity, and they're providing movement in the underlying as well, okay? Let's go to our next group here. These are investment groups and small funds. Um, these guys are basically your average investment group where people will join, they may pay a fee. Generally, everybody trades their own account, but they all come together. They all talk about what's going on in the market. They all do technical analysis together, fundamental analysis together, and then they wind up having trade ideas that they all decide to execute, and they execute them in their own accounts, and they make money. That's the idea. Generally, the person at the front of the room may be somebody that used to be a stockbroker. They might have been a market maker at one time. Usually, these groups are started by people that were once in the stock market, or maybe a retail trader who's been highly successful playing the game, at maybe a 7-figure or 8-figure level. They might start something like this. And, these people generally pay a membership fee, and they get the information from talking to each other, and then they trade their own accounts and make money. Okay. The average investment, company, or I should say the average investment group, that is somewhat informed, I should say they are somewhat informed of the overall market, obviously from the leader or leaders of the group. These people who head up these groups, they generally listen to suggestions that are made by larger institutions. They follow market trends. They're very good at technical analysis. They follow the news cycles. And, these kind of groups with the right people at the top, the right mentors, if you will, they generally buy and sell in the middle of a trend. They're never in at the lows. They're never out at the highs. They're trying to take profit in the middle, because obviously if they want to continue making money from their investment group by the membership fees and stuff like that, they need to make sure that they have profitable trades, or people won't join or they won't stay. So they're really trying to make money in the middle. Okay. The next one we have on here is small investors and retail traders that are informed. Okay, this is going to make up all of us who kind of know what we're doing in the market, who are consistently profitable. We're day traders, we're swing traders, we're position traders. We understand technical analysis, we understand fundamental analysis, we understand how the stock market works. We've been doing this for years. We are this category I call it small investor / retail traders. Generally, the way smart money looks at us, okay, Wall Street, they look at us as people who are informed, who do have some skill set, but generally most people who fall into this category, they buy towards the end of an uptrend, they sell towards the bottom of a downtrend, they make a little bit of money, and then they get out of the market and they rinse and repeat. And so they make profits, and they're profitable over time, but they're not making quote unquote big money. This is how Wall Street looks at informed, and I do want to say informed with quotations around it, retail traders, okay? The last category we're going to talk about fits into the retail as well, but they call it dumb money. Okay, now this is not me calling it dumb money. Wall Street calls it dumb money. This is uninformed traders and investors, and trust me, there are tons of them out there. Think of the people you know who do not win in the stock market, no matter how hard they try. Think of the people who trade and they always are losing. Think of the people who you may have talked to on Twitter or StockTwits, or maybe somebody you know who has traded and has lost and has never really been consistently profitable. Maybe they've won a few times, but they lose more than they win. They cut their winners real quickly. They let their losers run too long. This is dumb money by Wall Street's terminology. I'm not calling anybody dumb. I'm just saying this is what Wall Street calls this category of people, dumb money. This group is made up of everybody else outside of the groups we already talked about. Anybody else who has some extra cash who wants to trade or invest in the stock market. This group, they have very little understanding of what's going on in the market. They base their decisions on emotion. They're impulsive buyers. They almost always buy at the highs and they almost always sell at the lows, and they almost are always negative in their account, losing and trying to add more money into their account. So you might be going, okay, Ace, this is all wonderful. We're 11 minutes into this video. What does all this have to do with anything? Why this is important, guys, is once again, retail controls 15% of the market share. Smart money controls 85% of the market share. The reason why this is so important is because if we know what smart money is doing, we can ride their coattails and we can make money with smart money. As long as we know where and when they're looking to buy and sell, we can jump on and ride their coattails, okay? On CNBC, the Nigerian brothers, Pete and John Nigerian, they're very famous for doing this. They look at options flow and they look at, equity prints and they look at, mostly options flow, I think, and they try to ride the coattails of the smart money, okay? So in order to know where smart money is accumulating and distributing, we need to go ahead and understand the cycles of market phases, okay? And there's 4 cycles to the market phases that are out there. So first thing I want to go ahead and talk about is the accumulation phase. That's right over here, okay? So this develops at the end of a downtrend. So imagine price has been coming down here and we get to this point, okay? And actually, you know what? I'm going to use my drawing tools as a matter of fact here. So price has been coming down and we get to this point, okay? And after price has been coming down for some time, the losses for most small investors and retail traders, once they bought up here, and instead of the stock going this way, the stock's going down. And once the losses become so much for them, they start cutting. They start cutting their losses. And as they begin to sell their shares, smart money is sitting right here. They're sitting right here at the bottom and they're waiting to go ahead and buy. They're waiting to buy on the other side of that selling, and they're buying at a major discount. They're buying at a major discount down here, okay? Keep in mind, smart money, when they're accumulating down here, remember, they're more well-informed than you and I. They have way more access to data and information, way more than you and I ever will. Not only on the overall market, but also on specific companies. So they know when to step in and buy as well as they know when to step out and sell, okay? If smart money is aware of an upcoming catalyst, they begin to buy up shares. During the accumulation phase, stock's price is going to remain in a tight range, as you can see right here, okay? There isn't much money being made during this period. So this is the period where we see consolidation on our stock chart right here, okay? And the purpose of this phase right here is for smart money to be able to buy up as many shares as they possibly can at the absolute lowest price, okay? And smart money, they're able to keep a stock's price within this tight range by spreading negative news. They may go ahead and sell just enough shares to drive the price, or I should say keep the price artificially lower, just to make sure they scare everybody out of their positions, because they're wanting to buy. They are buying, they're accumulating, and they want to make sure they get all of the retail out of the positions before they go ahead and they take this up. Price will remain in this tight range until they're done accumulating. Small investors and retail traders at some point, they're just going to sell due to the price not moving when they're in here, even if they did buy. Even if some retail did buy here in, even if some retail did go ahead and buy at this area right in here, excuse me, right in here. Actually, we're just going to do this. Even if some retail did buy right in here, they're most likely going to go ahead and sell because the price is not doing anything at all. And smart money, they may get more aggressive and they may go ahead and just flush the price down. You see these right here as it's chopping around. They may just go ahead and flush these down as low as they possibly can to this test area. Okay, they put a test area below here, and they want to see how low do we need to make that test area to get every retail trader out, so we can go ahead and buy up all the shares. So like I said, if they want to get really aggressive, they're going to flush the price down just before support levels. They want to clear out as many stops as possible. All the the test levels, generally the where they think the stop areas of the retail traders are going to be. Okay, so smart money. They not only want to buy up as many shares as they can during this accumulation phase, but they also want to go ahead and, like I said, clear out any sellers so that when they do go ahead and get their position, they can allow the algorithms, the HFTs, to take over, and they can push the price up quickly with very, very little friction. Okay. And when that run up begins, they pocket large amounts of money in a very short period of time, which brings us to the next phase, which is called the ascending phase. Okay. This is the ascending phase right here. This is the ascending phase right here. Okay. And right here and right here. Okay. And so in the ascending phase, smart money's loaded up. Now they've let the algorithms take over. The algos are pushing price higher. Okay. And they're pushing it up as quickly as they can. This is where you get those wide range bars. As price breaks out above resistance and it breaks out of the consolidation range, everyone takes notice, drawing massive volumes and aggressive upward momentum. The retail starts taking notice. Everybody's like, whoa, hold on a second. Stock's moving. I want to hop in. The ascending phase, in essence, it establishes a trend that is referred to as a rising channel, and along the way forming bullish continuation patterns. Okay, so we're going to go ahead and see patterns as we go up that look like this. So what we're seeing is we're seeing higher highs and higher lows. Okay, so that is the pattern that everybody starts seeing, and everybody, including now retail, starts jumping on the bandwagon. Everybody wants to go ahead and get a piece of the move, so they're wanting to pile in this area right in here. Okay, as it rises. Now this is the period where smart money is making its money. Retail might start jumping in, making some money. This is really the time to go long and let your profits run. Okay, it is in this entire area right here. Okay. That's really where you want to be in, and you want your profits to run. Even on this pullback, let's say you're just a conservative guy or a conservative girl, and you break out and you want to wait for that pullback, okay, which a lot of us do because we want to make sure, hey, is this going to continue, or is it just going to reverse and go back down? This reaccumulation area right here, this area, this is where you want to buy in. This is the conservative buy-in point, okay? This is the aggressive buy-in point here, which is right at the breakout over the resistance level here. Okay, that's the aggressive area to buy in. This right here is the conservative area to buy in on the pullback. Okay, and then you get that continuation. All right, so this is the time when you want to let your profits run. Okay. There's more buying pressure than selling pressure. The bulls, obviously, right here, they're in full control. Okay. The distribution phase, this is when smart money's hit their target. Now they're looking to sell. And guess who they want to sell to? They want to sell to the dumb money. Okay. Because generally what's happened here is the uninformed traders, the dumb money as they call them, they did not get in here. And, they weren't quite sold here either. They thought, oh, it pulled back, it might go down, and then it continued up, and they're waiting, and they're waiting. And then all of a sudden they're like, oh my gosh, this is great. It's going to go forever. Everybody's in it. I'm ready to get in, and I'm going to enter right here. Right here. I'm going to enter right here because now I've seen this whole move up, and I'm so confident that stock XYZ is going to continue to the moon. I'm getting in right here. Well, guess what? That's exactly where smart money wants you to get in, because they're done. They've made all their money from down here to up here. So that what they want to do is now they want to unload and offshoot their shares onto you, okay? And they're going to start selling their shares to you while you're buying. So once again, this area right in here, this is where smart money is looking to sell, okay? The distribution area, okay? This is the period where smart money begins to unload their shares. It's called the distribution phase, as you see here, and it develops towards the end of the uptrend, as you see here. And let me just get my arrow. It happens at the end of the uptrend. And after it's been running for a while, you get into this distribution phase. This is the time when most uninformed investors, like I said, retail traders, are just getting in right here. As they're buying in, smart money's selling their shares off to them. They're unloading, they're locking in profits. So, you know, this is I call this honestly the area of death, okay? I mean, the train has left the station, and if you're getting in here or anywhere in this area, you are doomed, okay? Um, so smart money, while they're quietly unloading their shares, they're making sure that price is not disrupted. They don't want anybody to catch on to what they're doing, okay, as they're selling off up in here. And because if they did, they don't want to go ahead and see the price reverse. They want everybody to keep buying in. They don't want to see anybody selling. And they're willing to go ahead and not only sell their shares slowly over a period of time, to make sure that price stays within a tight consolidation range, because they're hoping to trap people in this range area right here. This whole distribution range is nothing but a big old trap, okay? Because what they're hoping is they're hoping that retail will get in there and they'll buy in here at this point, let's say, and then they get in here and okay, so it starts chopping around, but gosh, look at this, it's ran up so nicely, and I just gotta hang out and wait, and eventually I'm gonna see this move go boom like that once it's done chopping around, right? Well, that's what the dumb money's thinking, okay? And that's exactly what they want them to think. So they're just going to go ahead and they're going to unload their shares as slowly as possible. They don't want to disrupt the apple cart. They may even spread news, making the public believe that prices are going to move higher. Obviously, you know, this could be the talking heads on TV. This can be pump and dump kind of newsletters. There's all kinds of ways they disseminate information like that. Also, they may up here, believe it or not, smart money may be buying shares just enough to make sure to keep pushing prices higher, okay, to give retail false hope that this is going to go ahead and move up to the upside, okay? So they're just trying to draw in more buyers, and in the end, they're basically doing nothing more than trapping the dumb money. They're trapping the uninformed investors and the retail traders who are not experienced into this trap right here. And it's what it is, you know, it's what they do. So they continue to unload their shares. They draw in all their buyers until there's very little left. By doing so, the smart money's rid themselves of any buying pressure. So the buying pressure is gone now. When you get to this side over here, buying pressure is gone. There's no more buying pressure in here because they've gotten rid of it all through this consolidation. Okay, and since there's no more buying pressure, they can basically begin selling off the stock now, and it sells off rapidly because there's no buyers left. So the distribution phase is the time to be locking in profits or looking for other opportunities to go short. I mean, once you get here, this ascension phase, and you're right here, you should be locking in profits, especially if you got in here, or if you're really amazing and you got in here. You should be locking profits. This is the place to lock profits. And I'm going to just oval it again. Get out here. Do not get in here. Get out here. Okay. So let's talk about the descending phase. So, okay, after smart money is distributed and unloaded its shares, they allowed the price to drop off through support, okay, which is right here. Let's just draw our support line real quick. Okay, so there's our support line. So after they've unloaded their shares, they allow the price to drop through support, and high frequency trading algorithms take over. So right here, HFT, this is where everything accelerates. HFT takes over the minute support's broken, and it pushes the prices lower. Because there's very little buyers left, if any, because remember they cleared them all out through this distribution phase, the only direction is down, and the downward momentum picks up very quick because the algos and the HFT start trading the stock very aggressively to the downside. The descending phase establishes a trend that's referred to as a descending channel to some, so you see price action that kind of looks like this. Get my line here, and it looks something like this. So it's like a downward price channel, okay? And then along the way, it does consolidate. It forms bearish continuation patterns, as we're all aware of, or most retail traders who are successful traders are aware of what bearish continuation patterns are. I'm not going to discuss those in this video. That's another video for another time, but you will see those on the way down. And this is really the time right here. This is really the time to go short. Is right in this area. This is when you want to short. If you're aggressive, if you're more conservative, you want to wait for the pullback. Great, wait for the pullback as it comes here, and then you want to short here. Okay, and catch that move down. All right. There is more selling pressure than buying pressure, and in this situation here, and I'm going to oval this out real quick, right here, the bears are in full control. The bears have got it. So you want to be a bear. Okay. So that is market phases. I'd like to go ahead and take you to some live charts and go ahead and show you on an actual chart here what some of this looks like. Now, keep in mind, this is how can I put this? Charts are not always this clean. I need you guys to understand that before we look at some charts. Charts are not this clean. This is to give you an example of how distribution and accumulation works, and marking up, marking down, ascension, descension. Most of the time your stock charts will not look like this, but you can still see these different phases inside of the charts. Okay, and so that's what we're going to go ahead and take a look at here. So here is Qualcomm. Okay, I think this is about the best example of the market cycles. So real quick, let's look at accumulation. Okay, so as far as accumulation goes, we have accumulation happening right here. Okay, so this is that accumulation phase we talked about. All right, as you notice, it's kind of chopping around within this box area. It's not really going higher, it's not really going lower. It is the phase where smart money is going ahead and getting their shares. They're accumulating their shares right in here. And I guess in essence we can say strong hands are buying in this area right here. Weak hands are selling, because remember, we're assuming, and of course, this is the maximum the chart will go back, but let's say it came from here, and let's say the stock was coming from here, or let's even say the stock was coming from up here. It doesn't, or from down here. It doesn't really make a difference. Bottom line, we're accumulating here, and you can see that because there's a lot of this choppy action right in this little box area, okay? And then we go ahead and we go into the ascension phase right here. This is the ascension phase, okay? So, and let me just make that box again. I should not have erased that. So we were chopping around, smart money's accumulating, we break through this box area, we come up and we start moving up, okay? Sometimes you get an opportunity for reaccumulation, that's a pullback, okay? I think that opportunity, if I had to point to one at all, I would say this was the reaccumulation opportunity was right here. There's one right here. And also, to a smaller extent, there's one right there, okay? On this gap right here, where you see this gap, you should be thinking on this candle here, you should be thinking, I might want to be thinking about getting out, because this has ran a long time, okay? And keep in mind, the distribution phase starts up here. Once again, these charts are not going to be like the diagram because nothing's perfect in the market, but we can see a little bit of where that distribution starts to take place is right in here. Okay, so we get that up move here. We kind of smack up here against the resistance, and it starts doing this little chop, 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 and then all of a sudden it breaks through the support level right here. This swing, I guess you could swing low right here. And it starts, that swing low, breaks through there right here, and it starts its markdown period, or its descending period, if you will, okay? And it descends, it goes down here. Oh, that's horrible, shoot. Well, let me do this. Goes down, there we go. Goes down here, okay? And really, if you were looking for a redistribution period, like where can I buy in? I missed the initial thrust down, okay? It would be right here. This pullback, this area, that is your redistribution area. So if you want to be more conservative, you get this break, it's going down. You want to wait for that pullback. You want a more conservative trader, you would get in right here, and then you get that down move. Technically, you could get in here as well. Okay, it's another pullback area for redistribution, and then boom, you get another descending phase down here. Okay, and then as soon as you get through this descending phase, what happens? Because remember, this is distribution. All this whole thing here, it's all distribution. Okay, so what happens? Well, we're done distributing. Now we go right back into the accumulation phase. Okay, which is right here. Okay, so and technically, you could even say the accumulation phase can also be this too. Okay, because we had our big sell-off. And so now what we're looking to have happen from this sell-off here is we're looking to go ahead and see accumulation and then eventually price go ahead and move back up. Okay, so that shows you some of the market cycles there in terms of accumulation, distribution, a markup, markdown, ascension, descension. Okay, because this video is getting a little long, I'm not going to do any more live chart examples. I had a few more, but it's really gotten long here. And the last thing I want to do is go through a couple of charts here real quick. Not charts, excuse me, a couple real quick diagrams, and then we will be done. For some reason, it's not bringing up my chart. Or my diagram, I should say. Let's see here. Oh, that's why. I forgot I still have my drawing tools on. All right. There we go. So I wanted to go ahead and just go over real quick the emotions that happen when people are in trades. Okay, so we talked about the accumulation phase. So over here we would have the accumulation. Okay, so right here is where price would be doing that accumulating. Okay, and then we have that ascension phase. All right, and so what happens in the ascension phase? Well, it's kind of cool. You get the excitement, you get the thrill, and then as you come up, and you get into this distribution, this would be where the distribution area is up here, your euphoria, your, fear and greed, if you will. And then as price falls, anxiety, denial, fear, depression, and as you crack under a support level, depression, panic, capitulation, despondency. And then what happens? We have accumulation again down here, and then the stock price moves higher, and you go depression, hope, relief, optimism. I just thought it was really kind of a funny picture to show. As we're up here in this area, I love this little, complacent investors. What risk? What are you talking about? The market's going to go up for forever, And that's, like I said, that's where dumb money buys in because they think it's just sky's the limit. It cannot go down. It's got to go up. And then, of course, when we get down over here, and the prices are falling and people are freaking out, this is where, in this area, smart money is starting to accumulate their positions, is right here in panic and capitulation and despondency. Creates opportunity, and that opportunity is created for smart money. Smart money is creating their own opportunity right here, and this is where they are getting in and they are accumulating once again. And we start seeing that range bound right down here. And then once they get their all the shares they want, HFTs kick in, and boom, there we go. Depression, hope, relief, optimism, and then boom, we're back on to optimism and thrill and excitement and euphoria all over again. So it's a self-fulfilling prophecy. It really is. And then last but not least, guys, before I let you go, I'll show you this last one here. And I just thought this was awesome. Smart money is in the stealth phase. It's the takeoff. Institutional investors are piling in. It's the awareness phase, the first sell-off, the bear trap right here. then the minute we break over that resistance level, the media attention kicks in, CNBC talking heads start talking about the stock, and then public gets involved. And when the public gets involved and the HFTs kick in and everything starts pumping up, that's where the HFTs are causing this. Remember I said that the algos, they kick in after the smart money buys and starts the move, and they kick in and follow the smart money, and then the public jumps in. The I would say the informed retail probably gets in somewhere in this area, maybe around media intention or maybe right before enthusiasm, and then makes money. Greed. This is the big one. Greed. Everybody's happy because money's being made. Delusion. And honestly, guys, the smart retail's getting out here. Here. Hell, here. I mean, seriously, um, smart retail's getting out in these areas, and dumb retail's getting in here, and dumb retail's definitely getting in here. So and then of course we roll over in denial, and then you have the bull trap, which we see many times on charts, and then continues to go. And so anyways, I thought that was a really funny chart, or a really funny photo to show you guys there. And then the last thing I'll show you is, once you understand these market phases, once you understand this and you become really good at this and you can see this on the chart, then you can start looking at stuff like this. Then you can, I'm going to zoom in on this a little bit. Then you can start looking at this. This is what I love to do along with technical analysis, is look and see where is the smart money placing their bets. Where are they buying? Where are they selling? I mean, look at these trades, guys. $1,410,000 on AbbVie, okay? And Big Bull just meant that they were buying. They were buying calls on the ask, okay? Look at this, $2.2 million in Caesars Entertainment. They were bearish, big bearish bet, 2.2 million. They bought the 7.5 put. Now keep in mind, I'm not quite sure how old this is. This might be super old, so please don't reference this as actual current price action. Or I mean, look at these. Some of these expirations are back to 2015, so this is really an old print. But I just wanted to give you an idea. 2.2 million here, 1.4 million here, 700,000 here, 1.3 million here, 832,000 here, 208,000, 487,000. I mean, what am I saying with all this? Once you understand the market cycles, you can then look and see, where is the smart money buying, where are they accumulating, and if you can find that on the chart, then you can see this on the options flow. And if you have equity prints and dark pool prints, you can see that as well. Then you get an idea. If we're consolidated and we're at an area of support and we're consolidating, and they're accumulating at that area, there's a really good chance that stock might go up. If we're at an area of resistance and there's a lot of selling, there's a lot of put buying, and there's a lot of call selling, and there's a lot of equity selling, then that's an area where we can look to see the stock possibly fall off and go down, because we might be at a distribution level. So anyways, video is going a little long. I really hope you guys enjoyed this as much as I did. This is a topic I absolutely love to talk about, which is this topic right here, which is smart money, following the flow, following the prints. And once again, the flow has to align with the technicals. I never take a trade based off flow alone. I just want to make that point. The flow always has to follow the technicals. So technically it has to be sound. There has to be technical follow through. And then if I know smart money is got bets, big bets, 2.2 million, 1.4 million, 1.3 million, and the technicals are confirming that move, I feel so comfortable jumping in with calls, puts, credit spreads, debit spreads, and riding the trend right along with them. Okay. So anyways, guys, I hope you enjoyed the video. Please, please, please leave me some comments. Let me know what you think. Please give me a thumbs up on the video, and please subscribe to my channel. I got some other really great ideas for videos I'm going to be making in the near future. Feel free to follow me on Twitter. My handle is @AceTheMarkets, or on StockTwits, and my handle there is Ace, the number 8, trades, the number 2, day. And anyways, I know it's kind of a weird handle when I say it, but I'll make sure to put that into the description so you guys can follow me if you like. Anyways, guys, have a wonderful day. Trade well, and I'll see you in the next video.